One of the hottest topics in green energy is geothermal. And if you think geothermal, you think Ormat.
The darling of Wall Street analysts, the stock market doesn't believe it. What's making investors think that this company's returns that may be skyrocketing in 27, 26 is going to collapse into 28, 29 and the year 2030?
There might be something hiding underneath the company's compensation that's making them make decisions that might paint it as less of a geothermal story.
As well as look at Gen Digital, because a viewer mail said they wanted to see it, GEN ticker, and we're going to do a 3-minute drill at the end for that. Welcome to the Altimetry Authority show.
Let's talk earnings and
GAAP
favorite pastime.
So let me just say, earnings are worth
Wall Street. It's 2.5x
because their compensation goes up.
Wall Street's wrong again. Ormat has been a rocket ship this year. And right, it's been a rocket ship, Joel, for obvious reasons in terms of what's going on for what it does, which is geothermal power and the demand for power across the US and across the world. Let's jump in and Joel, show everybody what the real numbers show in terms of the company's performance and whether or not we think this is justified or not. Let's jump in.
You know, Rob, in our breakout profits research, we've been talking about stocks that have doubled in the last year, and that there are more than 300 stocks. At one point, there was 400 stocks. Some of them gave up a little bit that have doubled in the last year. And this is one of them. Now, why? Because when we look at the returns of this company, we're looking over the last 5 years. These are the as-reported numbers that are falling precipitously from a 3%, which is not a great return by any stretch of the imagination, down to something less than 2%. Now, in economic reality, if we look at the blue, actually this company is at closer to 4%. And holding around 4%. So what is it that's driving the stock price up so much, this geothermal power company? Let's look at the expectations. Well, they're around 4%. Wall Street analysts think that these returns are going to get cut in half. So this is when we take Wall Street research and we take the pro forma numbers and we say, what do they really think is going to happen in the next 2 years? And they're forecasting, when we convert that to uniform accounting, that this company's returns are going to get cut in half. Now, what's crazy is that the market and what's driving the stock up so much is just the fact that it's renewable electricity. And they're saying, oh, this is going to be in so demand. The U.S. needs so much electricity. Heck, the whole world needs electricity. And that's going to be at a premium. And this company is going to start pricing in and getting not cut in half in terms of returns, but actually double in the next 5 years. And that'll hold into perpetuity. Right, that new level of return for this company. Now, Rob, what do you think about that for embed expectations in the market?
Right. And so, I mean, everybody, you look at this and it's good to lay the land here. So Ormat is the largest geothermal power company in the world. And so geothermal is specifically the idea of you're going to punch holes in the ground in areas where the earth is naturally hot. Think Iceland is a classic example of this. Iceland has tons of geothermal power. What you do is you punch a hole in the ground, you push water in, it heats the water up, the water comes out the other side of the ground, and then it comes in, it's hot enough that it turns a turbine. It turns water into steam and you turn a turbine. It's just like what basically natural gas does if you fire a natural gas power plant. It's also just what nuclear does, right? All these power plants at the end of the day, they're all about turning a turbine. This is just a different way of heating up water to turn a turbine. And what everybody loves about it, Joel, to your point, it's green, it's renewable. We're not burning anything to do it. We're purely just using the Earth's heat. And so everybody loves Ormat because of the fact that they are the largest geothermal owner and operator in the world. And also they make geothermal power plant pieces for anybody else who wants to build it as well. And so everybody looks at this and they go, hey, I've got this opportunity to buy this company that makes a whole bunch of clean energy and has the opportunity to grow that clean energy that they're making. And why does that matter, everybody? Because as we all know, we are in a situation where the amount of power that is being consumed, specifically because of data centers, but also because of reindustrialization in the United States and everything else, is forecasted to rise massively in the next few years. What this chart shows us is how much we're expecting power demand in the US to grow over the next 5 years. In 2022, we only thought that we were going to see 24 gigawatts of power growth. Just for context, about, call it to give us an easy number, about 1,000 gigawatts of power is what's available in terms of capacity in the United States. So 24 means, basically 2.4%. We're talking about now in the last few years because of the rampant demand of power, because of what we're seeing coming down the line for data centers. Now we're talking about 16+% growth in demand for power in the next few years, which is an unheard of ramp in terms of demand for power growth. And the big thing is, if a lot of that power is coming from data centers and from hyperscalers, that demand for growth. Well, if you've been paying attention, that demand for that growth demand that they've already had, and this is just looking at for Alphabet and for Microsoft, how much their demand for power has grown over the last few years. If you notice, there's two different bars here. There's a light blue bar and a dark blue bar. The dark blue bar is carbon-free supply, right? This is things like nuclear. This is things like really mostly solar and wind that they're focused on. And you can see the lion's share of what they're buying is these carbon-free. Why? Because their bias would be to buy non-carbon forms of power. And that's why everybody's so excited about this, because they're like, hey, this is clean geothermal power that everybody is offering. And right, if you look in terms of the opportunity, Ormat talks about the idea that you have 10x current capacity that you could expand in terms of power around the Pacific Rim, the Ring of Fire, and specifically, right, places like the US or China where people want a ton more data centers.
This all sounds like this every reason why the market's correct, and the stock should be screaming upward. So why is it that Wall Street, some of the most optimistic fools, right, out there, Wall Street analysts have this company getting its returns cut in half, while the market has got caught up in this hype of it's all geothermal. And for that, we have to dig
Right.
in, right? And one of the places we dig in is not just the 10K, but the Form Def Fortune. And the reason why you get to study the Form Def Fortune, and let me just say it, Rob, is Charlie Munger's quote: "Show me the incentive, and I'll show you the outcome." And the Def Fortune is the most forward-looking, right, where the company talks about the strategy of the firm and what they're paying management to do. Now, Rob, when we look at the DF Fortune for Ormat, what do you see?
Right, and when we see it for just for context for everybody to like give you a lay of the land, what they are about 50% of their aggregate compensation comes from long-term incentive comp, right? There's three kinds of pay that you normally see. There's salaries, there's short-term cash bonuses, and there's long-term equity bonuses. And long-term equity bonuses for them are the lion's share of compensation. And when you look at it, those long-term equity bonuses, they're split 50-50. 50% in terms of relative TSR. TSR, everybody, is total shareholder return. They're saying, we want you, your stock, to outperform the market and outperform peers, is what they're actually asking Forma to do for the CEO and everybody else to get a bonus. The other 50% is megawatts capacity targets, meaning their goal to add power. And so this is important because exactly to your point, Joel, all this trickles down in terms of the issues here, trickle down to a story about how fast you can build power. It's really, really complex to build geothermal power. That's why Ormat is the market leader and nobody else has built a specialty of this, because it's really hard to do. Well, if you look at, so if they say, how can we possibly grow all this power? Well, what Ormat has done is they've said, well, it's really hard for us to grow geothermal, but you know what we can build a lot of? We can build a lot of batteries. And so what we could do instead is we can still be clean energy, but we'll just be clean energy in building a whole bunch more batteries. And look, everybody, if you build battery backup solutions, that at the end of the day is going to be a commodity business. Like, just let's talk about the narrative for batteries. If you've ever heard anybody talk about the narrative is, hey, power is expensive in the day and it's really cheap at night. So if we build a bunch of batteries and we buy the power at night and then we sell it during the day, or we just buy it and then we basically burn it off so that we can keep on having power, we're going to have this great arbitrage. Well, if you build a bunch of batteries to consume all the power at night, guess what happens to the power at night? It goes up. And so shockingly, the economics aren't that compelling. And batteries are a commodity at the end of the day. Everybody's building batteries. Tesla's building batteries. Samsung's building batteries. 500 different companies in China are building batteries. So building batteries and also operating a battery backup solution, those are going to be commodity businesses. So the analysts, the Wall Street analysts, Joel, to your point, that are looking at this, and by the way, just not for nothing, this isn't just an opinion. Just look at the fact here. So if you look over the last few years, they have seen their battery backup solutions grow in terms of capacity. The top left-hand chart here is installed capacity of power between their geothermal, other solar and other kinds of power, and then battery backup. And the bottom chart here is EBITDA growth in each of those. Notice how big the bar is getting for geothermal power. I mean, not for geothermal, for battery backup power, and how still little the EBITDA bar is. So what analysts are looking at, to your point, Joel, is analysts are looking at these problems in terms of compensation that are causing them to massively push investment into battery backup and saying, hold on, you're investing into a commodity business. You're not investing into your great genuine asset. So everybody who thinks that this is a great geothermal story, recognize even Ormat is telling you this isn't going to be a geothermal story. It's going to be a commodity battery story. And this is one that you should probably everybody avoid because of that. But just before we leave you on that, there are a set of companies that as we see this boom in demand for power that we do at Altimetry think are going to be huge beneficiaries. And so if you want to know what companies we think are going to benefit from this huge build out of the power grid, you can go to newenergyboom.com. That's NEW energy, ENERGY, boom.com. You can see it below on the screen. Go there to check out what companies we think could benefit massively. We put a whole entire special report on this. Companies that, unlike Ormat, are actually investing in the places that they should. But with that, Joel, before we wrap up, let's do one 3-minute drill that one of our
Oh,
subscribers, one of our viewers asked us to take a look at.
viewer
Let's look,
mail.
Joel, right? Let's look at viewer mail. Let's look at everybody. We're going to do a 3-minute drill on Gen Digital.
Norton.
So Gen did right, yeah, exactly. Old Norton LifeLock, everybody, for those of you who have not known that it's rebranded. Norton LifeLock, antivirus for consumers and for corporates, and also protecting of your finances, everything, letting you know if somebody has, open accounts for you or anything like that, being able to lock all that down. So Joel,
Mm.
right, this company has basically been sideways over the last year as we've had a phenomenal bull market, mostly Joel, right, because the
Roller
consumer.
coaster, but sideways. Yep.
Right. Let's take everybody through what the real numbers say in terms of what's going on here.
Right. So the orange, the as reported return assets would say this company barely earns or ekes out a return at all. That's because of the nature of the spend, of their R&D, of their leases, of a whole bunch of stock options, you name it, that just destroy the quality of the financials because not because the company does anything wrong, because GAAP accounting, generally accepted accounting principles, is very, very bad, particularly with technology companies. Now, uniform accounting fixes these things. It says, let's get to what the real return on assets is for Gen Digital, GN, which used to be Norton Antivirus. That's how I remember it from 30 years ago. But either
Absolutely.
way, 2021, you see a return that's increasing into 24 and 25. It's a phenomenal 200 something percent return on assets. I mean, basically, this company just sells licenses and licenses and licenses of use of its software, which has almost no incremental cost each more piece of software that they sell. Now, what is the market pricing in? Wall Street believes these returns are going to skyrocket, that they're going to triple, quadruple from the levels they're already at, which means, this company is just an all cash cow company. And the stock market says that this is going to be short lived, that 2027 will be the peak year, the analysts think, and these returns are going to start coming all the way back down to the levels they're at right now. Meaning all of this improvement that in returns, the skyrocketing returns that the Wall Street research analysts believe, the stock market saying, nope, that's going to go very quickly. And in perpetuity, the stock market at this price at $27 a share is pricing in that the returns are the same as they were in 24 and 25 and ignore everything that the Wall Street analysts are saying about 1 or 2 good years. That's what's priced in.
Yeah. And I mean, you think about it, right? So of course, there's two countervailing winds here that I honestly don't think, Joel, we'd probably say this kind of almost more makes sense than not. So the benefit win that they have, everybody, is in theory, cybersecurity is getting to be a scarier world, especially in the world of generative AI, which we got better hacks and everything like that. And also protecting your wealth and your identity is becoming more and more apparent with all those hacks as well. And so, yeah, of course, it makes sense that more people are buying their upsell from Norton to LifeLock and everything like that. But on the flip side, there are a whole lot of free alternatives to a lot of what they do, right? I mean, first off, when you buy your computer, you have Windows Defender, which is Microsoft's good enough solution for antivirus. And also, you don't have to have LifeLock to be able to lock your credit score and things like that. You can do that just by going to each of the individual agencies. So there's a lot of commodity opportunities for people to displace this. but they do offer real genuine value. So I think that, Joel, we'd probably look at this, we'd say, yeah, we get the idea that this might be a short-lived boom for them. I don't think that this means that this is I don't think we'd say this is a long or short. We kind of say, yeah, we get it. This is why the market's less optimistic than Wall Street. Do you agree?
Yeah, I mean, it honestly, really, if the analysts have something, and this is the problem, the Wall Street analysts, when you read the research, it doesn't seem like they have an explanation for why that return will continue, versus they have a couple of good years, and then competition will come in and do anything that they're already doing. You're going to be getting from other AI bases of doing what they do, right? AI security and AI based security for your AI and for whatever your software and tools are. So if that's the case, then this is short lived, and they don't seem to make a good enough case for it. That said, it is an interesting look, because if you thought they could maintain that 2027 return level, this stock would be a screaming buy. It would be, if you thought that. But it seems like the market's saying, no, no, any big return jump is going to be short lived. They'll be back to where they are now.
All right. So, everybody, if you enjoyed that and you want us to take a 3-minute drill look on some company you care about, drop it into the comment, or any other opinion you have about whether or not you think Joel and I are right or wrong about Ormat too. And with that, just hit the like and subscribe button. That's another episode of Altimetry Authority. Thanks so much, everybody.
Thank you, everyone.